All right, guys, welcome back to the Independent Investor channel. A lot of people ask what's possible in investing. I drop you into portfolio reviews from time to time to show you what is possible. If you would have asked me 20 years ago, if I were to have been having hundreds of thousands of dollars in the market, hundreds of thousands of dollars that have been wealth built over time, I would have thought you were crazy because at the time I started, I didn't have income, I didn't have a career, I was just starting out like a lot of people, and you really can't appreciate what is possible in investing. I think a lot of people start because they've been encouraged to do so by friends. Maybe they've done some substantiation on their own. But these videos are really cool, and I'm glad to offer these to the subscriber base and anybody out there that really take value in understanding what a real portfolio looks like. I'm going to drop you guys into my Roth IRA account. This is going to be Roth IRA account review number 1. You guys are going to be interested to see what we're working with, what the holdings are in there. Remember, the Roth IRA is completely tax protected. When I reach 59 and a half, I'm going to be able to look at this account, take what I want, tax-free. So the contributions and the earnings are able to grow tax-deferred for my entire life. So that's the example that I really want to set. This is a self-directed account, so there are no fees attached to this account. 2 big takeaways of my videos is that we do preserve capital through wealth preservation, and then leverage the power of the tax-protected Roth IRA account going forward. So I'm going to drop you into the account now, guys. Please enjoy the review. So this review will be chronicling the Roth IRA number 1. For you guys that have been with me, you guys know I do this on occasion. I do post the updates as far as the dollar amounts to Instagram, so make sure you're following me on Instagram if you're catching these, because I'll throw the screenshots on there and just in a couple seconds you can grab. Basically, I do that for these accounts total. I do that for the M1 Finances total, as well as the first trade. So I give you basically 3 portfolio reviews just on a couple screenshots. So very handy, just depending on how you want to see the information and kind of track my progress as these accounts do grow over time. You guys can see here we settled on this 20 share position in Boeing. This was just awesome. I really worked this well. Very strategic stock investing and trading, really, to make up for a very, very poor time on entering into Boeing. I think my initial cost was $3.75 a share. Good grief. Just couldn't have bought the stock at the worst time. And for anybody out there that's listening to me, don't think that you're immune to that either. That's really what comes with the territory with single stock investing. I don't care how good you think you are. You're not immune to buying a stock at the wrong time and taking it into a downturn. And boy, did we do that with Boeing. Holy moly, what a tragic chain of events that have happened with the accidents, and then to pile on with the coronavirus, the virus, the pandemic. It's just been pretty poor timing on that, but we've done everything we could possibly do and then some to really make a very, very bad investment a very good one, quite frankly. And this I'm willing to hold long. We're going to allow, because I do think Boeing is going to return to greatness. I just don't think it's going to happen overnight. I think it may take multiple quarters, and in all reality, probably multiple years to get back to where it was before, and they've got a lot of work to do, no doubt about it. They've got a lot of minutia to tread through in the company. They just laid off about 16,000 workers, some skilled craft as well. So my concerns do still exist, which is probably reflective of why I went ahead and liquidated the larger swing trade position, took profits, and I'll live to fight another day. I'm good. Thank you very much. I'm out. So Citigroup is in financials, long position here in the Roth. I'm about fully invested here in the Roth, so I'm satisfied now with just allowing these positions to roll. Carrier Global is the one that spun off of United Technologies, and these shares I've added to just a little bit to beef it up to something a little bit respectable. Just under $900 here in the position. It's almost even. This was not reflective of actual unrealized loss in here. This was just a figure that was reflective of when the shares spun off in the merger split.
that it did with Raytheon Technology. Caterpillar, just a company that I have to be invested. It's just that simple. Dow component, one of the best industrial, pure play industrial companies out there. And you know, I do like John Deere, I do like Cummins, and some of the others, big industrial plays. But right now I'm overexposed to industrials. I'm actually overweight, and I'm good. I really shouldn't be adding any more to industrials in the short to medium term. With the newly added defense additions that I've made within industrials, we're going to be cooling our heels a bit on the industrials craze that I just went through, and rightfully so, man. I just was looking for value, and that's where I saw it from my lens. If you guys certainly want to disagree with me or agree, that's the whole point of putting out these videos, is to become more aware as a group to what's out there. But I think some of the common themes that you'll find is that we're traditionally mulling over the same stocks, and that's a good thing. I don't typically spend a whole lot of my time covering stocks that are speculative in nature, nor do I spend a lot of my time focusing in or trying to find the stocks that are behind the best in breed in any one sector. I typically like to buy the best, well-known, well-established, as big a moat as I can possibly grab with their exposure, established businesses, and those that put the cherry on top of their business. In other words, the cherry on top that I'm referring to is the dividend. And Walt Disney here, we're looking for that comeback a little bit. Long position for me, and just a stock that I typically just leave alone. It's not doing too well right now. It's come off of its base of 100, which is fine. It'll continue to raise as things get back to normal, which we are slowly trudging to. It'll take a while, guys. That's just what it takes. Fedex, I've been really impressed with here as it's coming back as well. I talked about UPS, and this is really why I didn't invest in UPS. I would have had I needed more exposure to industrials, but I just don't at this point. So FedEx fits the bill. Home Depot has been silently on fire. Nobody in the YouTube community is even talking about it. I don't quite understand why. If you don't want to talk about Home Depot, you can speak about Lowe's as well. Lowe's has probably been as equally as on fire as Home Depot, and again, nobody talks about it. We're always busy talking about other names. I won't name names, but over the course of your life, you'll typically come back to and provide justifications as to why you always want to come back to these good quality, at least have some level of exposure to them, because they're the ones that are going to make you wealthy over the long term. All right, IBM, old tech here. Johnson & Johnson, a cornerstone in this portfolio. Kimberly-Clark, probably a fairly newer position in this. I've had for probably within 6 months. Bought it before the downturn, so it still has a little bit of work to do. Coca-Cola, just over 60 shares. I'll be looking to add to this position. I didn't really get to strategically take advantage of it the way I would want to. And McDonald's is in the same boat. I wish I could have bought more during the downturn. I really do. This is one of my favorite discretionary names. McDonald's, there's not a whole lot out there that I would like to buy. I really enjoy Booking Holdings, but I'm not going to invest in Booking Holding in a large amount because it is so volatile. Otis Worldwide, and this is the elevator maintenance company, again, that was a product of the split from United Technologies. Royal Dutch Shell, hopefully we are basing here and starting our march up in energy. That will be nice to see. Raytheon Technologies here was a product of the split and merger. AT&T, this is a newly established position in here, moved from the taxable brokerage account that I had on the outside. So basically reestablished the position here and took an extra 15 shares to add to that. ExxonMobil at the bottom here, so a couple oil companies that need to work. WP Carey, you guys are not going to recognize this. This is a new addition in here with the strategic goal of mine to get just a touch more real estate exposure. So WP Carey and then O Realty in the other. You'll see that when I roll out that portfolio review. But WP Carey in this relatively small position, nothing crazy at 35 shares, but you can see how that's off to the races. I loved everything I saw with this company. There really wasn't anything negative that I saw here that stuck out to me, especially to scare me off of investing in the stock. It was actually the contrary. And Walgreens Boots Alliance here to kind of complement the CVS holding in the taxable account. And then this is my passive aspect to this portfolio here, guys. You can see 1, 2, 3, 4, 5, 6 ETFs. This makes up a nice portion. I don't trade these. I just invest in them. A lot of this is really geared toward more of a passive profile, whether it be dividend paying stocks or these ETFs. You can see here the small cap value ETF and then a couple of specialty ETFs. I like this, owning real estate this way in this specialty ETF, as well as utilities. This utility is a beast, man. It pays 3%. Again, one of those names to where I mentioned, owning some utilities for some cash flow or an alternative to high-yielding savings accounts. This VPU is an awesome name. Emerging Markets is here in VWO. VYM is the largest holding in here, 242 shares of the high yield ETF. One of my favorites, just an easy ETF to own. We'll continue to add shares to that over time. And finally, VYMI, which is the international sister to the VYM here. So guys, I hope you appreciated this Roth IRA review. We roll these out periodically. Again, make sure that you're following me on Instagram, man. I roll these out just with the number and snapshot of these as the values increase, so you guys can stay pulsed in on how the portfolio is performing over time. So with that, I'll kick you back to YouTube. We'll conclude the video. Thanks, guys.
All right, guys, welcome back out of the portfolio review. I hope you enjoyed going through my stock picks and taking a look at the portfolio, what we're working with. It's performed quite well during the downturn over the last couple months. It really did take some damage, enter into a pretty healthy downturn. We were up about 25,000 in the account. No problem. No problem. That's investing. It happens. But we're almost back up to where we were before, and in some cases we're actually back in the black, which is great. But hopefully this can kind of give you an idea of what's possible in the market. It'll be great to see what the prospects are for this account and all of my other accounts going forward. I'm just a wealth builder just like you guys, and I started with nothing. So for you guys out there that are new investors, hopefully this gives you some level of motivation to say, you know what, I can do that too, because I'll be the first to tell you that you bet you can. You absolutely can. If I can do it, anybody can do it. Guys, you want to subscribe to the message, man, help us support the channel. Leave your comments at the bottom of the video and share this video out there with anybody that you know might appreciate looking into a real portfolio and getting some awareness to what being an investor looks like, what a portfolio looks like, and how certain investors like myself are seeking our exposure to the stock market. Guys, thank you so much for tuning in to the video, and good luck in your investment future.